Understanding IRS Form 1099 DIV, your step-by-step tax guide. IRS Form 1099 DIV, officially titled Dividends and Distributions, is a crucial informational tax document used to report various types of income received from investments, primarily in taxable brokerage accounts. Banks, brokerage firms, and other financial institutions issue this form to taxpayers who have received $10 or more in dividends, capital gain distributions, or other distributions during the calendar year. A copy of this form is also sent directly to the Internal Revenue Service, IRS, which allows the agency to cross-reference the reported income on the taxpayer's annual return, such as Form 1040. Receiving a 1099 DIV is a clear signal that you have reportable investment income that must be included when calculating your annual tax liability. The most critical information reported on the 1099 DIV relates to ordinary and qualified dividends. Ordinary dividends, Box 1A, represent the total amount of taxable dividends received and are generally taxed at your ordinary income tax rate. However, a significant portion of these may qualify for preferential treatment. Qualified dividends, Box 1B, are a subset of ordinary dividends that meet specific holding period and source requirements, making them eligible for the lower long-term capital gains tax rates, 0%, 15%, or 20% depending on your income level. The distinction between ordinary and qualified dividends is vital for minimizing the tax burden on your investment income. Beyond dividends, the 1099 DIV also reports other distributions, notably capital gain distributions, Box 2A. These distributions often come from mutual funds, exchange-traded funds, ETFs, or real estate investment trusts, REITs, when they sell underlying assets for a profit and pass those gains on to their shareholders. Similar to qualified dividends, capital gain distributions are generally taxed at the lower, long-term capital gains rates, regardless of how long the investor held the shares in the fund. The form also includes sections for non-taxable distributions, such as non-dividend distributions, Box 3, which are considered a return of your investment capital and reduce your cost basis. Finally, the 1099 DIV provides information on any taxes already paid on your behalf, which can be applied toward your total tax bill. Federal income tax withheld, Box 4, reports any amounts that the payer withheld under backup withholding rules. Additionally, the form can report foreign tax paid, Box 7, which may be eligible for a foreign tax credit on Form 1116 or a deduction on Schedule A. Understanding these withholding boxes is essential for accurately completing your return and ensuring you receive credit for taxes already remitted, making the 1099 DIV an indispensable tool for every investor during tax season. We welcome you to subscribe to our YouTube channel for more informative videos on taxes and finances. Thank you.